Okay, so good morning, good evening, ladies and gentlemen, and welcome to our third Fintech Fridays session of 2022, and the last one before we take a small summer break. My name is Peril, and with us today, we have an amazing panel of experts for what is supposed to be a great discussion. Before we start, just a kind reminder to keep your microphones on mute and rename yourselves to include your name and your institution name so that we can identify you during the discussion. So following a static Web 1.0, and the dynamic Web 2.0, the third iteration of the Internet, Web 3.0, promises a free flow of digital content, transparency, and efficient transactions, and data and privacy and decentralization. So for businesses big and small, this means lower cost, better customer relations, improved supply chain management, improved security, and greater accountability. For financial service providers, this also means exploring new avenues of products and services to offer clients. Virtual branches, customer service on the metaverse, smart contracts to customize products and services, and leveraging artificial intelligence and machine learning to expedite credit analysis, to name a few. So the objective of our session today is to first understand Web 3.0, explore how it can be leveraged by financial institutions, banks, and fintechs alike to better serve SMEs, in particular women SMEs, and help them grow their businesses and thrive. So I'd like to welcome my panel of experts. Effie Pilarino, global fintech and blockchain influencer, Yip Ta, co-founder of Unit Network, Anka Bogdana Rusu, head of public sector at C-Labs working on Cello, and Cindy Amar, head of business development and sales, Mina, at Matrix Port. So what I'm going to do is just ask you in that order, maybe ladies to introduce yourselves, and to maybe quickly in 30 seconds share what you do and the company you represent before we start the discussion. Effie?
Hey, hello, ladies and ladies. There are no gentlemen, I assume, here. I am Effie Pilarino. I am based in Switzerland. As Karel said, I am a global fintech and blockchain influencer. My background is very traditional Wall Street. I started my career in the 90s in fixed income structured products in New York at Salomon Brothers. So you get the culture that I was nurtured in. I've stayed in the industry for about 20 years. 10 years on Wall Street, then in the hedge fund industry, later teaching at McGill in Montreal. In the last 7 years, since 2015, I've been focused on fintech. I create content, thought leadership content in various formats, always focused in innovations in fintech. And of course, blockchain is a big disruptor of capital markets and finance. So that's where I'm coming from. And I'm very excited to be here with wonderful ladies.
Thank you. Yip?
Yeah, welcome everyone. My name is Yip. I'm currently based out of Munich, and I'm co-founder at a layer one blockchain called Unit Network. Layer one blockchain means like basic infrastructure, and we're out there to build a tokenization platform for what we call the token economy of the future. And as many of you might already know, the markets are not doing so well right now. And one of the problems for that is basically systemic, in my view, systemic design flaws of the way we are evaluating tokens of today. So hopefully we can all use this kind of market low turns to design business models that work more sustainably in the future. And next to co-founding Unit Network, I'm a manager and co-founder of different women empowerment initiatives for Web3, notably HerDAO and DLT Talents. And happy to share more about any kinds of questions you have about scholarship opportunities to attend conferences in Web3.
Perfect. Anka?
Thank you, Carol. Hi, everyone. My name is Anka. I lead the public sector team at C-Labs, which is a software provider that is part of the Cello ecosystem. Before joining the Cello ecosystem, I spent 8 years at the World Bank working on digital finance and financial inclusion. particularly in Sub-Saharan Africa and Latin America and the Caribbean. And a pretty significant part of those years were also dedicated to understanding how to close the financial inclusion gap for women and women SMEs in some of these areas. Right now, effectively, I work leading the team that interacts with governments and international financial institutions at C-Labs, effectively sort of breaching that gap of awareness of education of how blockchain could be used by these institutions in a way that has a meaningful, beneficial impact in terms of financial inclusion. Cello is a layer 1 blockchain. And again, happy to share more about it, but I don't know that is the focus of the conversation today. Thank you.
Perfect. Thank you, Anka. And then Cindy.
Thanks, Carol, for having me. So my name is Cindy, and as I like to say, I'm part of the team that is building electricity. How powerful is that, right? I mean, coming from TradFi, and many of you maybe have the same background, so my mind is just blown away every minute I spent with my team at Matrixport. Matrixport is Asia's largest digital asset platform. It's crypto trading holistic, really. It enables everyone to be its own crypto trader. So we have this app that allows you to do and to engage in any type of product. I like to call it a crypto product factory, really, where basically you can do stacking, flexible stacking, options, and over derivatives. And we also have a prime brokerage activity and in-house custodian that can host every type of digital assets, such as valuable NFTs or even DeFi assets, actually. We also have an asset manager that is regulated out of Singapore, and we're super proud of that. And we have a VC that is specialized in Web3 investments.
Perfect. Thank you, Cindy. Okay, so moving on, I think before we even launch any discussion, we should ask the first question, which is, which I want to ask Effie. What is Web 3.0?
Well, that's a great question, and there is some consensus, but there are variations out there. I think what's important to sort of understand it is by saying maybe what it isn't or what it's changing from Web 2. And I'll start from a very sort of basic concept, which is Web3 is supposed to enable the builders and the creators of, you know, businesses, of content, of whatever, to own to become owners instead of the big companies like the GAFAs of the world that today own and control the rents of the internet. So the idea is that through tokens, either you own and you get part of the rent or a big portion of the rent. Also, you might use the tokens to govern. So there's two big ideas here. One is a financial one, where you share more of the revenue generation from the value creation, more is shared. So there's a big aspect of fairness that is lacking in the current web. And the other is that the collaboration and the governance is completely different than what we have today. Today, we have a top-down type of governance model. And here we are looking to build something, again, that is much more fair and participatory. Now, does this mean complete decentralization? Not clear, but definitely more decentralization than we have today. In certain aspects, maybe 100% decentralization through DAOs and so on. In other aspects, it might be sort of a hybrid decentralization. The other part that always comes to mind when I hear Web3 is how we're going to solve the big problem of digital identity that is not solved today. And we need to solve that because on Web3, we will be moving value, not in the sense of an accounting transaction, but real value. So we need to have a digitally native identity. And the last piece is around crypto. In Web3, we really need to have a digitally native way of paying, which today we don't have. I mean, credit cards and so on are not digitally native. Crypto could be the option as we know it today. It could be an evolution of crypto, but definitely Web3 will have digitally native ways of paying. It doesn't need to be one way, doesn't need to be, you know, Bitcoin or some other crypto. It can be a combination. So I'll stop there.
Thank you. Very interesting. And so while I move these questions around, if any of you ladies wants to chime in, just raise your hand and I'll pass it to you. You can add to the conversation. I want this to be a comfortable free flow discussion. Yip, I want to turn to you. So now we have an idea of what Web 3.0 is. What are the main technologies and applications of Web3? What new innovations and functionalities does it bring to the equation?
Mm-hmm. So maybe just to build on what Effie already explained to us, Web 2 and Web 3. Web 2, maybe just in short, is the Internet of Communication. So each of us very cost efficiently can communicate across the globe. What we cannot do so cost efficiently is transfer value from A to B. Right? So we do not really have the means of full globalization as of today. But Web 3, the value promise of Web 3 is to make that an easy and permissionless activity across the globe. So Web3 could also stand for the future of work. The future of work is seen in a very different way from the future of work today. We have already started to see a few first implementations. I would say this is very, very early stage. Like what we see popping up is decentralized autonomous organizations, which is kind of a mix, a hybrid between a new way of thinking about collaboration structures in society. Decentralized autonomous organization might be a hype word for now. And some people skeptically say it's like a collective of people, a chat group with a bank account, right? And some people say, why would you call that revolutionary or something? But actually, when you think about this, might be the new way of people collaborating across the globe in a truly globalized manner without really the need to be in one national like border as we're seeing it today. It's not yet in a stable state. I would say very, very early days of discussions and so on. It's been around for a few years, but we have yet to see that model, like the cooperative on the blockchain, work in a scalable way. But so this is one way of thinking, how can we actually use all these kinds of digital technologies and all the trends of people moving across the globe, being more nomad and people really working on different jobs at the same time for different organizations at the same time, an evolution of the gig economy as we know it today. That's the evolution, the value promise that Internet of Value might bring. So that on the social side. The second thing is innovation, as in business model innovations. I think what we're seeing a lot is people start to rethink existing business models, both from like the fundraising side, how can we do like syndicate investment with a lot of small holders coming together and pooling, and that using digital technologies to do that. Effie was mentioning we still lack a key piece of infrastructure, which is identity, to make that really work like in a secure way. And business model innovations in particular in, for example, bringing in traditional financial products and combining them with gamification products. This is like what we've been seeing for the past 6-8 months coming up, called GameFi. So it's like game and finance. Like first there's TradFi and then there's decentralized finance. which is already a business model innovation where we say, okay, how can we use smart contracts to automate certain transactions without a human intermediary? This is like basically the upscaling of digitization using blockchain technology. And then the next innovation is basically to say, okay, now we have these kinds of decentralized finance products that are governed by smart contract, by code, by computer code. How can we now introduce some kind of gamification and some kind of social elements to it? And what we've been seeing is people have started to build X2 something products like walk to earn. Right? Walk to earn is a means of customer acquisition, of how can we actually incentivize users to do a certain activities and give them rewards that come out of a pool of people who have deposited into that pool before. The next step, we will probably see a lot of insurance products becoming disrupted in a business innovation way, not so much in a technological innovation way through blockchain technologies. I think, did I answer your question, Carol?
Sorry, I'm on mute. Yes, I mean, the idea is to kind of see the application of Web3 in our everyday life and what kind of innovation it's bringing. Anka, you have your hand up. You want to chime in on this one?
Yes, a little bit. I want to say that just building on what you said, we do see a lot of business model innovation. One of the things that I'm most excited about, especially going back to what Eep's last example, is not sometimes as much as business model innovation, but seeing models that exist in informal finance already that are sort of brought on chain, where you don't have necessarily to depend on the social capital of trust inside a community to be able to access, for example, under collateralized loans or group loans, but you can take it on the chain and benefit from that, right? And so I think even just traditional crowdfunding is a model that has existed in informal communities for hundreds of years, where communities will come together to purchase something and then share ownership. Except now with blockchain, you can have a tokenization of that, whether it's a, maybe it's a cow, or maybe it's just a plow that you own in community, but you can now have the proof on the blockchain that that ownership is shared, right? So I think it's one of those of taking informal business models that weren't necessarily able to scale the way that currently finance is being structured. And because of the technology, now they're scalable and replicable and don't have to be confined necessarily within one community, but sort of elevated to the global community to be able to interact with each other. And to me, I think that's an interesting point, because there's a lot of imperialism with technology and that sort of gets pushed back. And I was like, well, actually, if you've studied a lot of informal finance, you realize these ideas have been there for a really long time as business models. The technology to enable them to scale, it's what has been lacking and what's coming in right now.
And I want to stay with you and I want to build on that. So how can Web3 be applied by financial service providers? And would it look different if it's a bank or if it's a fintech?
Oh, wow. I could go on that for like an hour, probably.
Oh, let's stick to the 3-4 minutes, please.
I think starting with the second question, I don't know that it depends whether it's a bank or a fintech. I think it really depends on what is the objective of activity of that institution. I will apologize for my video because the sun just keeps getting in my face and I can't keep pulling down the shades. So for example, I think, if you think that core banking comprises sort of transaction, loan, mortgage, payment services, that is a fantastic area in which blockchain technology can be used. Even when you're thinking, so it can be used both on the back end and the front end, right? I think on the back end, information verification, credit scoring, loan processing, distribution of funds for, even a mortgage can take 2 months sometimes for individuals. For SMEs, it can take 90 days or more to secure a business loan. And so what blockchain can do is really streamline these services, reduce counterparty risk, decrease issuance and settlement times. By doing so you have authenticated documentation that lives on blockchain. You have KYC AML data on blockchain, and you have real-time verification of financial documents. You can definitely use sort of transaction data on blockchain of an individual or of a business to streamline credit prediction and actually build credit scoring models that don't exist today. You can have automated syndicate formation, underwriting, disbursement of funds, and so on. And that's a lot on just the back end of what an institution does. Even the World Bank is exploring right now how to get better transparency and visibility into the funds disbursements that they are doing through the Treasury, through loans and grants to member countries. A lot of the NGOs that have stepped into the utilizing blockchain for cash disbursements are talking particularly about the ease on the back end of processing these cash disbursements, doing the matching, and making sure that the verification of beneficiaries is there. And that's, again, only from the institution's perspective. And I've covered loans, right? Again, Cindy probably can go into TradeFi and how that works.
Yeah.
Blockchain and so on, right? So it's strictly, I think, there's a lot to be improved from legacy systems that benefits both the institution and the client. And it depends really on the objective activity of each of these institutions. And I'm going to stop.
Great. Thank you. Cindy, before I move to you, just quickly, Effie, you want to chime in on this one?
Yeah, just wanted to add on what Anka said. I think a great simple example is, imagine a financial institution or a corporate that uses blockchain to get rid of 10 people that are working in account payable department because of processing of payments and invoices and all that. That can be completely streamlined. And it's already in the works. I mean, JP Morgan has a wholesale coin, the JPM coin. It's not listed on any exchange, and it's used for payment settlements within their corporate network. We can see that easily scaling for SMEs and correspondent banking. I mean, that's a wonderful use case at the infrastructure level.
Thank you, Effie. Cindy, I want to come to you now and maybe build on what Anka was saying. So she did mention a bit of the end user and the client and the kind of benefits they can get. But I want to really understand the full value that clients and end users can expect from Web3. And also maybe just towards the end of your answer, if you can chime in on how ready are businesses and financial service providers ready to start experimenting Web3?
All right, so for people like me that have been in traditional finance or that are, I'm sure the customer pain, the customer journey and the pain, you're gonna feel it. You're working in traditional finance there, everything you witness that could be changed and that could be much more efficient. But because of could it be regulation? Could it be budget? Could it be, hierarchy and organization that are not lean? Nothing is going to happen. And it's not going to happen overnight. Definitely not, right? So that's super painful. The rise of new technology has been allowing that. We're speaking about fixed income before. When you think about being able to issue a bond in T0 instead of T+3. So settlement is going to be So eventually the settlement risk is going to be reduced to almost zero, right? So all these things where it's going to be cost efficient because you don't need to have more third parties, right? In between. How many, when you issue a new bond, for people I don't know, but when you issue a new bond, how many teams you have looking into it, from the debt capital market team, from the syndicate, from so many middlemen. And I come from there. So when I say that to my former management, they're like opening big eyes, right? But this is it. This is where we stand right now. So we managed to automate, we managed to make things much more smooth. And the thing is, we can use the human brain to do something else. So we're just freeing the airtime, of the regular job you could have before. We're freeing it with the new tech to put more mind and brain into the job that we're doing. So I'm just going to bounce back on a few things. Like I didn't have time to raise my hand because it's so much energy in this group today. But basically, the whole philosophy here, I think we're clear. It's about inclusiveness, and that's very dear to my heart. There is new asset classes, which is exciting in terms of investor perspective. The tokenization of real assets, the NFTs, the non-fungible tokens. These can be reached by new investors as well. So it's not only the products that are new and the yield or the return you can get from it, but also the type of investors, because thanks to this new technology, we can reach to underbanked, to unbanked, to people that normally would never reach because they're in emerging countries. And I speak also about ladies that are part of this population, right? So DeFi, Web3 is giving the power back to ladies, the power to be able to reach out, to use, and to be in control of their financial assets. And this is quite wonderful. So basically, even SMEs now have access to different sources of funding they didn't have access before. And inclusiveness here is from A to Z. It's in the process of creation, the author itself, and for its users. When I speak of the authors, if you look at the stats on NFTs, it's quite interesting to see that there's many more ladies that artists that have created NFTs that are bought than in the real world. That's quite interesting. So we're getting there eventually. So to me, Web3, which it's another debate for another day, for me is actually gonna be Web4 or even Web5 we start to speak about. But basically Web3 for me is a smart trade. So everybody wins. The product gets to diversify its clients or its fan base, right? The fan gets more from the product. And also the accessibility, as I said before, like everyone mostly can have access to that product, but also the job creation we're getting from it.
Amazing.
That's your question, Carol.
That's great. Okay, Anka, very quickly, because I want to steer a bit more towards SME, the conversation. Yeah, go ahead.
I think one thing that's really important to me is two things. One, I don't think that the end user needs to always fully understand what blockchain is to take advantage of it. I'll promise you that, my parents have bank accounts. They do not understand how the SWIFT system works. And I'll guarantee that most of the clients who access a loan don't understand. And so as long as the service is catered in a way that's accessible, people don't fully need to understand what a blockchain is and what is the underlying infrastructure behind, as long as they trust the institutions they're working with. And as for how ready institutions are, I think the question is there something in blockchain that can help you do your job better, serve your clients better, help improve your margins? And I think if the answer is yes, then that's when we're going to see institutions who understand the technology approach it, right? It can be as simple as, maybe it's not simple, it's a cool use case, but like making an NFT of accounts payable that an SME holds to be able to take out small 30, 60-day loans against that from a fintech. And it's all on blockchain, right? Like unlocking liquidity very quickly is one of those clear use cases that can be unlocked by almost any institution who deals with SMEs. Okay, I'm going to shut up now and let you go.
Thank you. And I think your metaphor is great. We take for granted that everyone knows accounting and how banks work, but they don't. I think the only difference is they've heard of it for so long that they trust it. And it's just that in number of years, like I think in tech years, the internet is moving so much faster that we don't have the luxury of having to hear about something 20 years before we move into it because it's too late. I think it's just that we need to reframe and recalibrate the number of years and how long we need to wait for us to trust the system or trust what's out there to move into it. Cindy, very quickly. Yes.
Yeah, just I mean, to bounce back on that, it's an amazing debate we can have today. But basically, the way I see it is that at first, for traditional finance service providers, Web3, DeFi was seen as a disruption with its two sides of a coin, right? But the thing is that rather than that, today we should really evaluate as a natural evolution. So, I mean, I said it before, but by creating greater value, promoting financial accessibility to masses, DeFi is complementing traditional banking and it's not replacing it. And I think this is something we need to be super clear on. It's not a threat, it's an opportunity.
Perfect. Yip, so some of the biggest challenges that SMEs and women SMEs face are complex lending processes and lack of customized products. I mean, a lot of the times institutions simply give them an off-the-shelf one-size-fits-all product, which is, as we know, all irrelevant at the moment. So how can Web3 help financial service providers solve the problems they have in serving women SME customers?
Well, this is a very complex question, and I'm sure my colleagues here on the panel will have better suited technical answers to you. I think my short answer is just to think about how you can help your customer enlarge their access to capital pools, because now it's not limited anymore to a small pool of capital, but in effect, they actually have access to the entire world of capital in a permissionless way without actually. In fact, actually nowadays you can open up a wallet from anywhere and tap into Web3 without undergoing KYC in your local jurisdiction. And this has been the major bottleneck when you think of SMEs across the globe, in particular in emerging markets, that for them it was not they were not profitable customers. This was like what Mohammed Yunus did with the Grameen Bank to prove the case that you can bring banking to the poor. But it was not a very scalable process because in the end, it still needed a lot of human validation and human contribution to bringing back the funds and so on and so forth. Now with this technology, we actually have all the means to scale up this idea of microfinancing and make it a very profitable market. Now, coming back to the question of how can you make the products from FSP players, maybe we need to ask Efi or Anka or Cindy, who are more versed in like technical processing of credit lending from banks' perspectives.
Thank you for that, Yip. Anka, you feel like you want to say something here?
Sure. I think I'm talking too much. I'll let Effie go first.
Okay, great.
Yeah, the way I see it today is, if you look in finance, what is happening, the way it is tackling the financial inclusion problem and credit, for example, for SMEs, is through what we call open banking and embedded finance. So basically today, if you want to borrow, you don't need to go to a bank. Credit is available where you are. It can be for an end consumer at the point of sale. It can be wherever you're doing business. I mean, great examples of this is like if you look at the Shopify platform for merchants, these merchants are offered through Stripe on the Shopify platform, credit. So here we have credit on a platform like Shopify, which has nothing to do with, it's a marketplace for merchants, basically. And it is provided by a fintech stripe that doesn't even have a banking license. So banking as a service from a fintech and so on. So you see that evolution. And this is done through APIs. The next level of that is to move everything on the blockchain and therefore make it much more scalable, because we are changing the infrastructure. Because again, all these innovations that I mentioned before, the embedded finance, that's great for SMEs, are still running on the same infrastructure, SWIFT and all that system, you know, at the infrastructure layer. And if we do manage to change that infrastructure with blockchain, then we're going to have huge network effects. Correspondent banking will become much easier. You know, credit, it won't make a difference for an SME whether they are in this jurisdiction or the other, because we are talking about open finance. Once their credit worthiness can be established through data, it won't matter. So that's where I see it's essentially, there's going to be more openness than what we have today in the financial system. And that doesn't mean that regulation won't be respected, but that's where we are going. Of course, in Singapore already, we have more ventures that are offering this, but we need to scale that and make it more global. I stop here.
Anka.
Yeah, very quickly, I wanted to give two examples that actually have been tested and implemented that I think gives a good idea of just exemplify exactly what Afi and Yip were talking. One, it's Ethic Hub, which I think in its very initial stages was actually funded by the IDB Lab. It's based in Spain and in Mexico. It works with coffee farmers. And the way that they are part of the conversation of financing for SMEs is they effectively pool funds from people in markets with very low inflation, up until recently, Europe and the US, right, who would get very little interest rate on small sums, $1,000 to $5,000, and then pair it with SMEs, especially coffee farmers in Mexico. They're extending to other countries in Latin America right now, who weren't able to borrow funds except at really high interest rates. And by mediating this, what they're able to do is benefit both the lenders, who get a bigger interest rate than they would normally be able to do, dramatically reduce the interest rate that the farmers are paying. And at the same time, they are, I think, also dealing with some of the supply chain by selling really exquisite coffee in their shops in Europe. Another one that was recently done actually by the Cello Foundation with Mercy Corps Ventures was in Kenya on how do you bring employer-based lending models into the DeFi world, right? In a way where employers are not burdened with managing the administrative tasks of tracking the terms, tracking the loan payments. And also up until recently, they, and again, it goes back to what Effie and Pete were saying, they were constrained to borrowing funds themselves at the local interest rates. And there's capital constraints there. But with DeFi, they're able to access global capital that will lend to them at lower interest rates than immediate providers in the area. And with smart contracts, all of that back office administrative tasks of dealing with the terms of the loans and tracking loan payments are being automated, making it so much easier and feasible to move forward with. And I can share in a follow-up email details about these and how they can be scaled.
That would be amazing. Thank you, Anka. Effie, you wanted to add something?
To add on that, another application use case that I'm starting to see has to do with paying wages to workers on a daily basis. I mean, right now, believe it or not, in the US, there's over 64% of Americans that are living paycheck by paycheck. And you know, there's all sorts of offerings of early wage access with fees and so on. This can be solved in one of the US Uber type companies is already doing that by giving daily wages, and this can be done easily, cost efficiently and securely through the blockchain. So there's so many examples where we're eliminating counterparty risk, processing risk, and cost of processing payments that the SMEs are going to benefit big time from this.
Yeah, thank you. And then Cindy, I want to hear a bit also from you on this, and maybe I want to broaden the scope a little. You know, we talked about all these different types of services and that we can get, but we also know that this new on-demand concept of having everything fast, conveniently at a click of a button. So is Web3 going to really be able to create that opportunity of loans and accessing all these types of financing that conveniently? One, and then two, is it also going to allow the creation of and the integration of non-financial services? Because we know that a lot of the time the SMEs, what they really do need is networks and trainings and education. And can Web3 help build those NFS, non-financial services, in that and integrated in the services?
Sorry, I was muted. Right. I think here you're touching from the finger the concept of DeFi, decentralized finance. Is that right? So I think so. Basically, it's the use of blockchain that allows to get rid of these third parties I mentioned before that can be involved in any traditional financial transactions. And basically, it's a peer-to-peer financial services on the blockchain, such as Ethereum. So basically, what happened with DeFi is that it allows a bit described before, but it allows to be much more fluid and far-reaching. So it can access areas that were previously untouched by traditional finance, as I said. It helps to tokenize and financialize actually assets that may not have been previously have had values or were really difficult to add value to. So I think this is really the big disruption we're seeing here, and this will be not only for banks or fintechs but any other type of business really is going to be something that is going to be instrumental to make things, as you say, like as accessible as just like one click. And to me, this is the real evolution that we're seeing right now. Kira,
You're on mute.
Yeah. You're on mute, yeah.
Sorry. I mean, it's only been 2 years we're on Zoom and I still forget. So thank you for that, Cindy. So what I wanted to do is maybe ask also, you touched upon this, Cindy, a little while ago, and you said Web3 has the potential to give women financial independence and freedom. Can you maybe just, develop that idea a little more? And then maybe I want to hear from Yip on that as well.
Yeah, of course. I mean, that's the thing is that innovation in crypto I've already proven to bring more opportunities to earn. I mean, Yip, you mentioned before, but we have the play to earn, and we have the famous example of Axie Infinity that in the Philippines allowed people with low revenues to get up to 11 times the minimum income, right? just thanks to through the game, basically. So that's one thing. But also, I mean, the use of cryptocurrency as a store of value in emerging markets. If you look at those countries with that are facing currency devaluation, such as Turkey, and if you want to preserve your saving, a smart trade would be just to just do the effects of your Turkish lira into USDC, for instance, right? That's just a simple way just to preserve your savings. But you look also at countries in bankruptcy, like in Lebanon. So you have some cash. Do you want to keep your 10,000 US dollars in a bank under your mattress, or sending it to a crypto platform? Just like, it's just like a matter of common sense to these these days, right? So cryptocurrency is also to me, what I really like about it is for the greater good. So it's of the people, by the people, and for the people. And we also, what I really like, because I was mentioning the DeFi before, but it has introduced a new model of governance, we can say. So, in traditional businesses, it was really much about like hierarchy and this and that, but no, it's more about being bossless. It's more about being democratic and allowing everyone to bring a stone to the building, really. So this is really something that I really love. I like Anka bounce on that.
Sorry, before moving on to Anka, I wanted to hear from Yip as well a bit on this. And then Anka will hear from you. You're on mute. Now you're on mute, Yip.
Yeah, Effie has already mentioned that now we're in a phase of value creation for this industry. It's comparatively still a very, very small industry with market value by now less than $1 trillion US, right? So maybe 1% of the global equities markets, just to give you a little bit of context. And yet, like, the largest blockchain protocols would be considered top 20, top 25 most valuable companies in the world when you look at just the pure market cap, Bitcoin being the largest still nowadays with maybe a bit more than $500 billion market cap. And what we're seeing is we have the opportunity to rise up. We don't have yet a very long history. The industry in itself is 10 years, maybe roughly 10 years. And then there have been a bit of cycles. So every time there was like a bear market cycle, not too much of innovation happened. Right? And that's the good news for everyone who wants to join the industry right now, because there's so much upside to be gained. There's so little knowledge to need to learn to catch up. I've run a few blockchain education programs and like trained a few thousand people across the globe in basic blockchain literacy, mainly women and people in emerging markets, because for me, like for many of us here in the room, or actually all of us here in the room, it's quite inclusivity, or zero exclusivity is quite a passion, a topic of passion. So what we've observed is when women get into the market right now, and it takes them maybe 6 weeks to really learn basic blockchain literacy, maybe 18 weeks, a bit more than 3 months, to a bit more than 4 months, to really learn the basics in a way that you can have conversations, give workshops, have talks, and contribute to the ecosystem, either as a small scale investors or even as a builder. We've given out with some of my initiatives a few hundred scholarships for women, like adult women, to come into the ecosystem by giving travel stipends and accommodation stipends and conference tickets for them to go to the leading industry conferences. Like last week in Austin, Texas Consensus, we sent about 20 women there just so they can catch up and learn with the latest insights and make the business connections that are in there, in the assumption or in the hypothesis that if we grow in, like if we enter in now in the next 2 to 5 years, we have a very strong belief that we will be the leaders of the emerging technology, right? So you want equality or gender parity by 2025 in Web3, so that we don't have the same issues as we have in traditional finance, where women come in at later stages where it's not about value creation anymore, but it's just about value distribution, and where we reach a stage of saturation in which then we ask for quotas and female leaders and try to train them up when we missed the train and when it just got started. And it's actually the really beautiful thing about Web3 now, that you can come in and be top of the industry in a comparatively short time compared to traditional finance. So let's not miss out on that train.
Yeah, amazing. Effie, I'll just 1 minute. I got to go to Anka first. And then Anka, I actually want to build a bit on it. So when you're, and I want you to kind of maybe touch upon, because I got this, one of the questions here, so someone sent it to me here, is what kind of new business opportunities does Web3 provide to women entrepreneurs? So what are new things they can do? So when you're, putting in your perspective, you can, touch upon that as well.
Sure. Thank you so much. I think for me, if I think back of what are the main few obstacles for women's financial inclusion, one is lack of immovable collateral, right? Because many times when you have to access loans, collateral matters. Gender is an issue in and of itself because of the ways that a lot of credit scores assessments are being built. And then the effective distance of moving, because women, we know, are just more constrained in their transportation and sort of like their unpaid work related to households. And being able to actually go and access loans and talk to agents is one of the obstacles that they have, right? And so to me, as I think about blockchain, and this is kind of why I came into the world, because I saw this technology as being able to eliminate some very concrete obstacles that traditional finance had, right? If you're talking about sort of culture, collateral and lack of movable collateral, registries that show the tokenization of movable collateral is one of the things that is very easy for blockchain technology to bring about and then serve women, right? Particularly women historically, and due to the way a lot of the laws have been written, men are the ones that still own a lot of the immovables in many parts of emerging countries. Credit scores can now be assessed based on a history of transaction and history of income coming in, and can effectively just take out the gender component. They can be gender and racially blind because they look and build algorithm based on history of transactions on blockchain, independent of the human being behind. And so that can truly benefit women. And last but not least, the ability to access this on your phone. And it's important that it's not only a smartphone, but a feature phone. And there are players in the Celo ecosystem that effectively have enabled secure blockchain transactions on feature phone on USSD standard. Happy to share more, is another one, right? You don't have to spend 3 hours away from your business or away from your family that you're trying to care for, because we know women are very time poor and are able to access this. New business models. Look, I don't think that new business models are gendered, right? I do think that women and men entrepreneurs have equal access to new business models that are brought about by technology. It is important, like Yip mentioned, to lift the information barrier and make sure that women are aware of these business models. And whether it is bringing SACCOs online, and we've seen this happen where women just take the initiatives of looking what is the most efficient way for the technology to serve them. I mean, Ethic Hub has an amazing woman co-founder. I'm actually seeing that some of the most interesting socially impactful business models existing in the Web3 world are women, because women will be very pragmatic in saying, I see this problem and I am going to pair it with the technology that allows me to solve this problem without being tied down by a lot of sort of existing bias. And in some way, maybe because of the lack of some of the networks that men have in the financial world, they're able to more easily access this without a bias.
Thank you. Effie, you wanted to chime in on this.
Oh, several thoughts, but I think what should be mentioned, and it does a link to the Celo protocol, the Cellular Blockchain, which is really focused. I mean, there's a lot of social initiatives built on it. I'm very familiar with some of them. One has to do with offering credit to small businesses and not doing it through the traditional way of credit scores, but through the validation of a business network. So here again, we are taking something that happens in a local social context, and we are able to digitize that and scale it cross-border and internationally if we want to. And these are great examples. So I think women can contribute with great ideas that are solving business problems with a very acute social eye, from a very social angle. And of course, another big example is, with COVID, many governments wanted and had to distribute help to people, individuals and businesses, and we saw how difficult and costly and challenging and mistakes were done with that. And this has led us to think of how we should create money that is digitally native and fit for a specific purpose, not for everything. It's for that purpose, for that period, it can be spent there. And there, women are brilliant in designing this and scaling these types of projects. The technology is there, and women can contribute very, very much to what needs to be done and how to scale it. You don't need to be a coder to get involved in this industry. You need to have a problem and try to find how to use this technology to solve it.
Amazing. We're almost out of time. Cindy, I want to ask you one last question, I think, to kind of answer a lot of those concerns that we have out there. Web3 comes with words like open, trustless, and permissionless. And these are all words that don't really instill trust, not in the financial services world. You would know that. So how can we create that sense of trust around this technology, and so that, more FSPs as well and traditional players start embarking on this new journey?
It's interesting you say that it doesn't actually give trusts, that these words are not, because on the contrary, from what I witness, is that actually there is a sort of like, it's the fact that all of these has been built by a community, It's not like it's not like centralized and what type of people, the same smart group of people that has been building it. The fact that it is actually a community, and it's all about the community that has been, at inception. The fact that is, we spoke about, Yip mentioned the DAOs before, So the fact that you give ownership to the members of the community, to decide, about the organization and how is it going to be done. I think all of these make it trustworthy, to be honest. So that's why it's interesting to see, like everyone is saying, is it the glass half full or half empty? But to be honest, that's why I'm surprised by the question, because I am such a believer in that community.
Sorry, I also bring the opinion of, more of a mass market that has the fear of the unknown, right? So we need to make sure that they do see this as a perfect opportunity and nothing but an opportunity to serve better, to be better, to have that customer service and customer centricity and really building convenience and results and value. I think we have to end it here. I don't know if anybody has last words that they want to add. Otherwise, I want to thank my 4 speakers. You have been amazing. This has been a very insightful and informative session for me. I hope it has been as valuable to my participants. Thank you all for being with us. And we, as I said, we're going to take a small summer break and we'll be back in September with our next session. We will send you the details in due time, so please keep checking your emails. Wishing you all an amazing rest of the day and a wonderful summer. Thank you, ladies, for your time. Thank you. Have a great weekend.
Have a good one.
Bye-bye.
Bye-bye.